Okay guys, it's Monday the 19th of February and we're on the FTSE 100. Just been triggered into a long position after the 8:05 AM pin bar right here. I was watching the 8:10. Really I was hoping this was going to form into some sort of a signal for me, but I just didn't get it. It just didn't line up properly, so I've taken the 8:05 as the market started to break above the high. Now coming into this trade, the market has been testing in between a trend channel for about over a week. The market has been trending itself upwards. It hasn't really been making very strong bullish movements. It has just been dragging itself up this trend line. Now coming into today, we've came down, we've tested at the sloping support area of that trend channel. I want to be a little bit careful because up above we have this swing point right here, lining up this morning with the MA200. I'm going to wait and see how the market reacts when it gets up here. If we do see strong reactions coming in, may take a small loss or a break-even trade. I'm going to wait and see how the market reacts. Really, I'm just looking for some sort of a price spike. Ideally, 6 points. Just looking for a relatively small movement on this trade. Early morning, it is coming into a Monday, so the market's had the weekend off, so I just want to be a little bit more cautious. Yeah, so let's wait and see how we get on anyway. I'm going to wait and see if we test up at this level at the MA200, then watch how the candles react. If I can get to 6 points, really I'll just take that profit, take a 0.5% on the trade and call it a day. But we'll wait and see how we get on. Market is just starting to press up toward that previous little swing point. And as always, what I'll do when the trade completes one way or the other, I will then take you through the analysis. I'll also show you this trend channel that I was looking at coming into this morning. Okay guys, so 8:20 we have tested at that level, so at the previous swing and also at the MA200 area. I'm just going to get rid of this line now. A little bit of rejection came into the candle and we have started to press up once again. Now that we're pressing up once again, I'm really going to consider the stop to be at break even. I just want to see it spiking up toward really this whole section up here. Where I would then look to take profits. If we don't see that and the market then starts selling off now, I'm just going to come out of the trade at the break-even level. As I've mentioned, I want to be a little bit cautious coming into the market on a Monday morning, especially after such a strong move down like this. Okay guys, so that market just spiked up. I got the 6 points and I have closed the trade. Basically testing at these previous swings right here. Wanted to be a little bit more cautious, so I was happy just to take the 6 points on this one. Whoops, just pressed the wrong button there, sorry. Let me just move this out of the way. Bring up the little window from today. Again today, so £262.30. We're at 8:30, so yeah, a really good Monday. Actually, you can see the rejection is now starting to come into this candle. Now we may still put in a very strong rally, but for me, coming down and testing at this sloping support with the MA200 there and with so many swings here, it just made sense to look for a little bit of a smaller profit target. So what I'm going to do is I am going to pause the video. I will then bring up the 10-minute time frame and we can look at this trend channel that was one of the bases for this trade. Okay guys, so I'm just going to add to this video quickly. What we can see is after the market tested at these swing points right here, it's then came all the way back down to 7285.4. So this candle would have stopped me out for a loss on the position if I had decided to hold onto the position. And also, even if I had been cautious, it would have came back down and taken me out at the break-even level. This is why it can be good to use recent structure and then a little bit of common sense and just think, okay, we've had multiple tests here. It's very likely that if we see the market pressing up into this level, even if it is going to press higher, we're going to see some sort of a reaction. And then you just take your profits at the sensible price action level. Okay guys, so we're now on the 10-minute time frame, and what we can see is our trend channel here. If we zoom out, make it a little bit smaller, you can see the market from Really, it was testing it all the way back on the 12th of February. So testing as support and then testing as resistance on the way up. And we were testing as support from really the 13th of February, test. We had a false break, false break, false break. Then we started testing again once, twice, and 3 times. So when the market broke down toward that sloping support, it was also one of the key trading zones for the day. I was happy to look for that bullish bounce, but really coming into this morning, I would have preferred to have traded from the resistance level. What I was going over was that we were coming up toward key resistance areas on this market, really on Friday. I went over it in the Sunday analysis video. Coming up to those key resistance levels, I was expecting some sort of a bearish movement, and because of that also, we missed the movement. It happened at 1 a.m. in the morning, came all the way down. It's one of the reasons why I was being a little bit more cautious. If I was looking for this bearish reaction and I wasn't able to capitalize on it, there's nothing to say the market isn't then going to make an even stronger bearish movement. So coming into the trades, when I'm having a buy like this, it just means I'm a little bit more cautious. I'm happy to take a break-even trade or a small loss rather than simply holding the trade for the full position loss. And sometimes that means I miss out on the bullish movements in the market. So this trade could have came up, taken me out of break-even, and then made the rally up toward the target level. However, really what's the most important thing for me is having a solid trading plan that makes sense, not only with what the market is telling you, but also with your trading psychology. And for me, I knew after this movement here, I needed to be extra cautious, because if I took this and held it and it just came down and stopped me out, rather than simply blaming the trading system, I would have started to blame myself because I already had that bearish analysis from this zone. It's one of the ways you can just, add into a simply mechanical system to help you deal with the psychology side of things. Because what tends to happen when people fail with their trading plan is they deviate from the trading plan, and they tend to deviate from the trading plan because something happens that then triggers an emotional response. So the emotional response should be part of your trading plan. You should have ways to help you avoid those emotional responses. Okay guys, so that's everything for today and for this trade. As always, I hope that was helpful. I hope you all have a great trading week. I'm James Orr, and thank you.